Hey traders, it's James here from the A1 content team, and as we start today's stream, I want to share with you some exciting news from our friends over at FX2 Funding. FX2 has just launched their two-stage evaluation. The two-stage differs significantly from their one-stage, offering many benefits to traders. First of all, the profit targets are much more manageable, with 8% in the first stage and 5% in the second stage. Next, you'll get a 10% fixed overall drawdown that does not trail your account balance. You get all these perks on top of FX2's existing world-class customer service, high-performance technology, and a choice between two amazing trading platforms, CTrader and DXTrade. There's a reason FX2 Funding boasts a Trustpilot rating of 4.7 in this time of industry turmoil. They are a serious company run by seasoned business professionals and always take conservative steps to protect their traders. For traders looking to get funded, you can use promo code A1Trading15 to save 15% on all funded accounts. That's A1Trading15. The promo code can be found in the link in the description below and in the live stream chat right now. Now, on to the show.
All right. Good morning, guys. Welcome back to another live stream. Hope you're doing well, and hope you guys are ready for another trading week. We are getting closer here to market open here in the U.S. Just so you know, sometimes it can get confusing because, FX traders and futures traders, the market is open, almost all the time. But for stock traders who make up a huge portion of, the New York trading volume, the stock market opens up at 9:30 a.m. Eastern time, which is in about 8 minutes from now. The reason I mention that is because what you'll notice is that right around 9:30, there's usually a big surge in trading volume as the stock market opens up, and the stock exchange, of course, has a huge amount of interest. So we are coming close to that. Just about, like I said, 7 to 8 minutes here before we get into the New York session really full swing. Taking a look at things here overnight, we've got the dollar index. Take a look at this. That 15-minute chart looks like a very regimented sell going on right now. Doubling back here from its recent jump on Friday. We had a big push last week, and follow through was pretty strong there. Now we've got some reversal, and that reversal, we'll see how much that really takes effect. But it looks like to me, I actually thought this move surprised me when I saw this morning. I actually expected the dollar index to make a push right on up to that 106.4. That would have been my first guess. But it looks like we might be pulling back here before potentially finding support again. We might just, the dollar might just be stuck in a range for a little bit. And what would keep the dollar stuck in a range would be, the Fed is going to cut interest rates at some point. But it really matters. Let me set the scene. Let me back up with the dollar index. A lot of people watch the dollar index. It really is an important index for the whole market. It doesn't matter what you trade. It is very important to pretty much everything. And what I want to kind of outline here, what is the bull case? The bull case for the dollar in the short term is that other central banks are cutting interest rates at a faster rate than the U.S. It doesn't matter if the U.S. is cutting interest rates. A lot of people are saying, well, how is the dollar bullish when they're going to cut rates at some point? Yes, but it's like, who cares if it's like if you're running a race. If you beat somebody by 1 second or you beat somebody by 30 seconds, if you're the first place winner, you're still the first place winner. So when it comes to these central banks, trying to stay strong and not cut rates, the dollar is kind of looking strong on that front. You have other central banks around the world making the decision to begin their rate cut process. The U.S. is not over that hurdle yet. We can ask ourselves, why is the U.S. not yet cutting rates? By the way, here's just a quick PSA. Here is our schedule for today in terms of live stream. We got Ivan joining at 9:45. We got Forex James coming on 10:15. So got a nice show planned for you here today. If you're enjoying it, do me a quick favor. As we get started, hit the thumbs up button on the stream. Happy Monday to you. Traders love Mondays. You know why. Markets are open. All right, so let's talk about this first of all. We've got inflation data first. And also, I don't know, check this out, guys. I changed this a little bit around. I was playing around with our CPI chart. And I just, you can look at the other currencies too by adding them in here. But a lot of our traders, they look at, when you look too many, it starts to look terrible. But a lot of traders, they really just focus on the dollar. If you're somebody who trades gold, if you're somebody who trades indices, if you trade dollar crosses, most people are trading something around the dollar. And so when I pull up inflation, I defaulted this to just be US inflation. Now, as I mentioned, you can add other inflation charts for other central banks. So like if I'm looking at Europe, which in this case, to my discussion that I'm going to make right now, this is actually important. So what I'll do here is I'll also just make this look a little cleaner by decreasing this down to 1 year. Okay, this looks good. Inflation data looks good today. We can give a thumbs up there. Looking good. Inflation data on the EDGEFINDER, really important metric. So if we take a look at Europe and the European mainland, the euro, and the UK, here's the thing. If you take a look at this, you've got inflation. Go back to January 23, and you had inflation much higher in these places, right? The UK and Europe than it was in the US. Inflation was still high, but look what happened over time. Inflation for all three made progress, but who made more progress on inflation? Not the US. The US did not make more progress on inflation. The reason for this is growth. The US, arguably, and this is a good thing, boasts a lot of growth. Their economy, in terms of relativism to European counterparts, the US economy looks a lot stronger. And that strength in the economy has led to inflation falling much quicker in these other places, and inflation in the US staying sticky. Look at this. Now the blue chart is actually over the greens, right? All that's showing us is that inflation has made more progress in UK and Europe, getting closer to that 2% target. In fact, guys, the latest round of data out of the UK, it's hard to see because it's a dark green, they're at 2%. Europe is honing in on 2% as well. Europe is at 2.6. Meanwhile, the US is still at 3.3% year over year inflation. Currency traders, gold traders, indices traders. What I just outlined is arguably the main battleground of the entire market for the last few years. It's all about inflation. If you're a currency trader and you're asking why is the dollar strong recently, I would say this is a pretty good reason as to why. Inflation in the US has not continued its directional pace as its European counterparts. Okay. So when you take that and you say, well, how does that impact the dollar? Well, high inflation out of the US means that the Fed is still seeing a lot of growth. They're still seeing inflationary pressures, and they're probably going to take their time to cut interest rates. Remember, cutting interest rates, rate cuts are bearish for a currency. So we see the other central banks beginning to cut rates, but the Fed is stalling on rate cuts. That presents a bull case for the dollar. So am I super all in bullish on the dollar? No, not really, because how can I be super ultra bullish on the dollar when I currently have a position long on gold? Well, can they coexist? They can, but usually dollar strength leads to gold bearishness and vice versa. It's not always the case, but I have a bull case on gold that is basically, look at the overall theme of central banks. Let's check this out. We can add in Switzerland, right? The banking center of the world. And look at what we've got here. We've got inflation coming down. Inflation coming down across, look at the general direction globally. Inflation seems to be coming down. Okay. Inflation coming down makes me want to buy gold, because inflation coming down could mean rate cuts. You know what else it could also mean? Inflation coming down could also mean that the economies of the world are slowing down themselves, and that is leading to prices not rising as quickly. And if that case is happening, I also like the story for gold. So I really like the bull case for gold. I've not been quiet about this. I've been obnoxiously loud about how much I like gold longs. And I re-entered my trade on Friday. Now, please understand, even though I'm convicted, even though I like this trade, I need to make a distinction to new traders in the audience. I just broke down the bull case for gold. There's bear cases for gold. There's also bull cases that, there's bull and bear cases for everything. I am never 100% convicted of any position that I take. The reason I say that very clearly is because the markets can surprise you. Something can change. What if, I don't know, something out in the Middle East happens, or Taiwan and China start beefing and they start going into some sort of conflict? We can't predict that. And so the market can change at any time. There is no reason to be 100% convicted on any position ever, because the market conditions could change the second you hit buy or sell. So if you know that, then you always have to consider the idea, what if I'm wrong? If I am wrong with gold, and I've said this many times, if I am wrong with gold and we break that 2,300 level, I need to, not want to, not, I think I might not, oh, let me move the stop. No, I need to get out. Point blank, as simple as that. If gold breaks the lows, I need to get out of my position. If gold bounces and continues here and makes a nice push, which I think it might, I think the probability for me, based on my analysis here, better chance of it going up than going down. But that's not a certainty. And when I say I think there's a good chance, I'm saying like 60% chance. I'm not saying 80. I'm not saying 90% chance. I get a lot of comments on my videos, a lot of comments on my social medias of like, Nick, you were so right about this, or you're so wrong about this. And I always sort of reiterate that if somebody says, Nick, you were so right about this, I mute it. And if somebody says you were so wrong about this, I mute it. What do I mean? I mean that when somebody says, Nick, you got it so right on that trade, I said, I got it so right on this trade, and I stuck to my rules and things worked out. But it's not a certainty. I wasn't 100%. You always kind of have to take the edge off of anything in the markets, because nobody knows with certainty. Okay. So I'm not gonna rant on that much further, because we got a lot of charts to look at. Let's talk about the S&P 500 for a moment. S&P seems to be, in my view, looks like it's due for a little bit more of a pullback. You know what makes me say that? You take a look at the king stock right now, Nvidia. Nvidia gapped lower here this morning. That's going to be the third day in a row of potential downside, depending on how this candle for Nvidia closes. That being said, if you get a big green candle today and we close the gap, maybe even we go further, maybe that's all the pullback we get for now. But if this Nvidia chart closes red today, to me, the stock market looks top heavy in the short run. In the longer run, I'm a buyer. I'm looking to pick up some of the industries that I think have a lot of potential, sectors that I like, which, if you want to get a full list of things that I'm buying and selling all the time, you can join our Discord VIP room, which, if you're not in there already, let me pull this up really quick. If you're not already in the VIP room and you would like to join, this is your last call. This is your last chance. We're going to be ending the sale very soon for our biggest discount of the entire year. If you've thought about this in the past and you're considering it, this is your chance to do so. For currently, we're going to be doing 50% off our VIP membership group. You can get all of the trade notifications. If you want to see the trades that I am taking, good or bad, all the time, real accounts, no nonsense, no nothing, come join the group. It is currently 50% off. That is half its usual price. And for stream viewers right now, we're going to do something special. For stream viewers, we will currently do 55% off the group while we are on the live stream. Here's how you can get access. Click the link that's just been dropped in the chat by our producers. You can click this link, speak directly to a member of our team about getting that 55% off live stream discount, and come join the action, come trade with us. Again, we do offer one-time payments to join the group. You can get in on the action, join our coaching webinars, chat rooms, level up everything that you're doing in your trading. I'm telling you, it is worth the money, 110%. Okay, so let's also take a look at yields this morning, because I'm curious to see if this is helping or hurting the dollar story. So yields are down. Well, they were up, and then they dropped here on the 20-year. The reason I'm looking at the 20 years because I'm long TLT. TLT I made a nice little bounce back here this morning. That's probably the same contributing factor to why gold is making a little bit of a push. I'm also long silver. So I have long silver, long gold. These are my current positions. Please remember when I show you these things, I'm not telling you to do them. These are just my personal things in the market. None of this is financial advice. Bitcoin was down 3% earlier. There goes Bitcoin on the daily chart. I mentioned this to my friends Miko and Mark, who come on the show pretty recently, or pretty frequently. I've talked about this idea that I want to start building a position on Bitcoin, but I'm going to be kind of patient. Man, I don't know if you guys follow any of the crypto circles on social media, but I don't really trade crypto very frequently. I do want to have some longer term exposure to cryptocurrency, but man, the crypto space seems like a fire has been lit, and it is a forest fire, because everywhere I look on the crypto community, everybody who's touching altcoins is getting smoked right now. And Bitcoin being down, from its highs, let's call it, all the people who kind of chase this high, they're currently, let's say you were the unfortunate soul that bought the last, high price. You're already down 16.7%. You might say, well, that's pretty bad. But in the altcoin world, it's way worse, right? I mean, I don't really follow a lot of altcoins. Can somebody in the chat mention an altcoin that you've heard about that I should pull up? Because I'm telling you, the altcoin world, I just know from charts that I've seen on like Twitter and Instagram and stuff, people are getting really, really hurt by the crypto kind of sell-off, and it's not even sold off yet. My point was showing you that is when you look at Bitcoin, this is not even a sell-off yet. Real sell-off in Bitcoin looks like this. So if you see a real sell-off, the altcoins like they've done in 2022 and 2018, 2019, when we saw kind of the topping out of Bitcoin the last time, the altcoins can lose 99% of their value. AVAX USD, I've never pulled this up, but let's pull it up. AVAX USD. I am not really a crypto follower, to be honest. I just want to own a little Bitcoin in my portfolio long term. But look at this, 2490, this thing. So again, same rough period, and you're down 62%. With the altcoins, you can get yourself in a lot of trouble if you're on the wrong side of it. Obviously, you can make a lot of money if you're on the right side. But I just wanted to mention that because I know the crypto world is quite volatile right now. Anyways, the euro dollar bouncing back a little bit, the pound dollar up slightly here this morning. Curious to see if this level holds for sellers on the dollar, or if we just kind of break back into this range we've been in. Pound USD, I was really watching this break of the 1.28 level. When we were moving higher, I did mention at this time I was very bearish on the dollar that we would likely make it to 1.28. And we did make it to 1.28, and I thought we were going to keep going. It looked like we were going to break out. Candle reversed, and then we proceeded to kind of sell off with, especially on Friday, where we had hotter than expected PMI data out of the US. Meanwhile, Europe saw cooling PMI data. So when I look at this, here's my concern with the dollar is, let me pull the dollar back up. Where's my DXY? There it is. So with the dollar index, you are pulling back here. My concern with the dollar is that we might just be in a really choppy environment for a while as traders and investors kind of guess whether or not the Fed is going to really cut rates this year. I'll tell you this, if the Fed does not cut rates this year, let's talk about that scenario. If the Fed does not cut rates and kind of surprises markets with no rate cuts, that dollar is probably going up to 10, right? Not 10, but 110, like it's probably going to really, really push higher because other central banks are already making the move to cut interest rates. I think that the Fed will cut rates. And so where does that leave us? Well, a lot of people think the Fed is going to cut rates. It's just a matter of how soon. So it kind of leads to this range bound for the dollar index. This is why when it actually comes to trading the dollar, I haven't really been trading it bullish or bearish. I've just been trading other things because I'm kind of just neutral on this chart. In terms of a short-term price action perspective, it had a nice breakout. It might be pulling back. And I would say there's a good shot that there are still bulls that want to support price around 105.20. just based on technicals. But on fundamentals, it's tricky because you have US economic data cooling, but inflation staying stubborn. So that keeps me from shorting the dollar outright, being super, super strong short on the dollar. But then again, that economic data cooling leads me to believe that we may see inflation start to come down. So yeah, that's my thought on it. But anyways, like I mentioned, stocks coming down just slightly here today. You've got the NASDAQ down 0.5%. Again, the idea here is being led by NVIDIA gapping lower here this morning. NVIDIA is, practically is the market right now. It is so important to the rally. But man, I really would love to see some other participation. There are so many other sectors in the market that people have just kind of ignored because NVIDIA is so hype filled. But really, there are other areas of the market that I actually really like. Some industries that have performed not as exciting, obviously, are going to be like your consumer staples, which is like boring defensive stuff, but financials, industrials. I mean, I can also see why there's a little bit of hesitation in these areas. Utilities. I know I saw a chart this weekend, a study done just on how historically utilities are incredibly cheap relative to the S&P 500. Utilities are like the most boring. There's no more boring spot than utilities in the stock market for most people, myself included. These things are boring. What are utilities? Utilities are power companies and water companies and the most boring stuff in the market. It had a big run up because during the AI stuff, a lot of people speculate, and I still like this case. If the AI stuff really takes off, guess what people are going to need a lot more of? Power, right? You guys seen that that chart that shows that, like, in terms of a Google search versus a ChatGPT search, ChatGPT uses 3 times the amount of power per search than a Google search does. I thought that was really interesting. So if utilities keep pulling back, as absolutely boring as it might be, I'm considering building a position in utilities. Again, the most boring stuff can sometimes be the right place to be at. So I like utilities if they continue to pull back. Do I like technology? I love technology, but I can't justify buying it on a move higher. We're starting to see a bit of a zig and a zag, right? You're seeing a big zig, maybe a bit of a zag coming in here. You guys, for me, when it comes to buying indices, buying into things like that, I need to be buying it on a pullback. I don't like to buy running up. So if we get a proper pullback, which is more than more than appropriate. I'm saying that as in, like, I don't think it has to pull back, but I'm saying I think it's very appropriate for these stocks to take a break. And my interest in terms of the indices is more well-rounded than just, I just want to buy tech, right? That's been the obvious play this year, but it's not the obvious play forever. Tech will not always, be going up while everything else went down, because 2022 called and they want their money back, because look at this. During 2022, just long the NASDAQ, you got destroyed, right? 38% down. So my point with showing you that is that a lot of people get very short-sighted in financial markets, and they look and they say, well, NVIDIA just goes up every day, and I only want to be involved in NVIDIA because that's the stock that goes up. But again, let me show you a crazy chart. You guys ready for this? Semiconductors are not a new thing. Semiconductors have been around for a long time. You guys want to see a scary, scary chart with semiconductors? Look at this. This is 2000, when semiconductors were also really, really exciting in the market. And they launched SMH. This is a semiconductor ETF. This is where NVIDIA, this is its neighborhood, right? All of its neighbors, AMD and Qualcomm's and so on and so forth. Look at this. If you had bought too much into the hype at this time, if you put your whole portfolio, everybody loves to say, well, I should have just put my whole portfolio into NVIDIA, and you shoulda, coulda, woulda, but you didn't. At least I didn't. I'm a little bitter about it, as you can tell. But look at this. My point with showing you this is this will hopefully bring some rationality to it. If you bought the hype in 2000 and you were the unfortunate soul to buy it at the wrong time, do you see how long this took to get your money back? To get back to break even, it took you 6,424 days. It took you from 2000 until 2018 if you bought the semiconductor ETF. Why do I show you that? Because hype can be very dangerous. It doesn't go up forever. And when it stops, it can take you some time. Here's a mini version that we saw in 2021. 2021, if you had bought into the hype at the wrong time, now again, you could have bought the hype here and you would have made a lot of money. But even if you had bought there, look at this. It came all the way back to basically break even during the sell-off in 2022. So if you had bought here, this peak to trough still took you 580 days to get back to break even. That's after sitting through your money going down by 50% almost. So half your money was gone at one point, took you 600 days almost to get back to break even. So I show you these charts just to remind you that when people get very, very hyped about stuff, you just need to be very careful. Okay. Bitcoin, anything that you see a ton of hype in, just be patient and careful and understand that bear markets happen to everything. And those are the times, if you're a longer term, holder of something, to build a position. So when you see Bitcoin starting to sell off, this could only be the beginning. But for me, I would probably start averaging in to some Bitcoin on a longer term position size or positioning around like the 50s. If we get into the 50s again, I would take a stab at starting a small position on BTC. So long story short, keeping an eye on it, keeping an eye on the different areas of the stock market that I like as well. And real quick, guys, we're going to take just a moment's break before we bring in our first guest here of the day. We've got Ivan FX joining the call. So stick around with me just after this quick break, and Ivan is joining the action. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, and we're back with Ivan. Hey, Ivan, how's it going, man?
It's going all right.
It's good to have you back on the show, as always, and got a lot of movement already starting here this week. The VIX is up 4%, gives you a nice start to potential volatility. What are you watching here today, Ivan? We've got stocks slightly lower. You've got the dollar lower as well. Gold and silver slightly up. Bitcoin down, and the euro and the pound seeing a little bit of upside. What are you watching today?
If I could just share my screen the fastest I can ever do it. Yen pairs have had a little bit of a dip this morning, I would argue. There you go. But then that has been reversed. I am wondering if dollar yen hitting 160 was a local target for the market. So yeah, that was I don't know what was the move. The move was 100 pips, give or take.
I saw that. Is that the next attempt at intervention? What's going on there with the yen?
Nah, this is not an invention. This is just market moves. It's very interesting to think that way. That's nice little 100 pips is that's not Bank of Japan because we have risen quite fast. This is just normal market moves. But if we dropped like 400 pips, then then I could be inclined to Bank of Japan. I have seen recently that there's more and more talks that they are going to, or they need to, not going to, but they need to increase rates in the next meeting in July or something. Then this might be reversed, but so far so good.
I know, Ivan, that with the yen, there's been kind of a push in the direction of like slowing down bond purchasing programs. And I'm curious if you could just for a second explain Why is that so hawkish, right? So a lot of people have been kind of making the point for the yen in the sense that they're slowing down their bond purchases, and that could be considered potentially hawkish, as you mentioned. Maybe also rumors about rate hikes. Is the yen going to see some strength off of that?
Okay, long answer, very short. You need to know the base of where we are right now. Bank of Japan is spending, I don't know, upwards what trillions, I think it was 6 trillion yen on buying bonds. That lowers their the value of yen, and they have done that like unlimited amount of money. They have said at least. And now when you go away from that and you spend a bit less, maybe 5 trillion and 4 trillion, that is seen as hawkish. And then if you add interest, if you increase interest rates on top of that, that is seen as hawkish. But they're still ultra dovish in whatever they're currently doing. And they're the most dovish central bank of the G7 countries.
Yeah, so it's almost like less dovish, more so than it is hawkish, which I think is maybe a better way of saying it. So it's like less dovish for them to talk about rate hikes and reducing purchasing.
Yeah, it's more like going 100 miles an hour and then going down to 19.
Yeah, that's a good way of putting it. I like that. So for you, Ivan, when it comes to the yen, are you more looking to buy dips on yen crosses, or are you waiting for a true sign of reversal? What are you thinking?
I know your questions, but I'm not going to get triggered because I'm triggered. Because you have to look at the current monetary policy. What does it say? It says currently you're going to spend a limited amount of money. So it has to be yen bearish until they change. Because they've said for like, I don't know, 2 years now that they're going to change. Has it happened?
Yeah.
So yeah. I can't work on what they say, because they have said it so many times that they're going to do it, and they never did it. So I'm just going to listen to their actions instead.
You know what I took out of that too, Ivan, if you think about it, it's a good point, because the Bank of Japan, if you take a look at the Bank of Japan versus the US central bank and the European central bank, I would argue that the US and European central banks have been a lot more transparent and clear about what their plan is. And then they proceed to actually follow through with their plans for the most part. Now, that's not forever, and they don't have a 100% track record of that. But if you compare US monetary policy and European central bank and UK, relatively speaking, we kind of know as traders and investors what to expect. But then you look at Bank of Japan and it's just this wild card. And it makes me wonder, is that why people, is that another contributing factor to why when we look at, you've got the Australian dollar against the Japanese yen, or if you pull up the dollar against the yen or the euro against the yen, this yen is just in a free fall over time. Is it also because people are starting to just really be not trusting of what to expect from the Bank of Japan? Is that a contributing factor, do you think?
I don't know where the shift came, but we have a new central bank governor of Japan, and they were supposed to back then go from trying to cap their yield curve, so the yield on a 10-year from like 0.75 to 1. And then the day before, Nikkei published like all exclusive article about that they were thinking about doing it, and then the market reacted on it, and then the next day they didn't.
Yeah, and
they use the news, or they use journalists to publish their stories to see what the market does with that information, and if it doesn't give it a good enough reaction, then they don't do it.
Yeah, that's so interesting, and it's just such a question of how much can you take what their antics are? Are they real? Are they kind of trying to butter up the markets, trying to make some sort of manipulation to in their favor, which is not something unique to the Bank of Japan. A lot of central banks do that, right? They jockey for position, they jawbone, if you will, to try and get kind of some sort of objective complete for their bank. And I think that's, again, not unique to Japan. However, with the Central Bank of Japan, there's not like clear, hey, we're going to be doing this sort of intervention program. We're going to be doing this. It's a lot of times it's kind of like trying to talk down the market. And then, same thing for the Fed, but at least they have kind of like the dot plot and they stick relatively to it, and they speak transparently about what they want to see in the data in order to see rate cuts, so on and so forth. So in terms of the yen, for me, it's like this is just a tough trade to tell me that if this thing dips, that buyers are not going to step in and do it again. We've done this so many times, and it doesn't mean that it can't break down. It will break down at some point. Something will change. The dollar may lose strength. The euro something might change. But we've done this pattern where we hit up against a level of resistance, and then we break through it, and then retests of those areas become key levels of support, and we just keep moving higher and higher against the yen. And despite other central banks joining the party, Ivan, for kind of dovishness, we still see, as you mentioned, the Bank of Japan being the most dovish of the group.
Yeah, and that's the fun part. And that's kind of also like, what does it mean? I think that's another question you have to ask yourself. What does it mean that a country cuts its interest rates? And then some do, or some did, last few weeks, and some didn't.
Yep.
Australia didn't, New Zealand didn't, but Canada did, Europe did, UK didn't, America didn't. And then you get like these small, I would call it the small divergence in between the central banks. But what does that lead to in terms of Forex? And you can see euro yen now going higher on a weak economy, probably rebounding a bit now. But it's been an incredibly strong euro yen trend for 2024. Why is it so? It's Bank of Japan by itself devaluing their currency. Now, the problem for Bank of Japan is that, or the mismatch is that they have said they're going to start increasing interest rates, which they did once, because when they reached their 2% target. But 2% target has been above the target for the past, I don't know, is it 12, 14 months in a row? Like, how much more do you need?
Sure. Yeah, no, it's just an interesting one to watch, as just, even though you see other central banks starting to come out as more dovish, and the Swiss National Bank cutting rates surprisingly. I mean, you've got a theme of rate cuts, and yet the yen just can't seem to catch a break. Anyways, Ivan, I want to push on to some other topics as well. What do you think about the dollar right now? Again, you touched on it for a moment there, the euro and the pound. Dollar pulling back. Is this a pullback before we kind of make a push up to that 106.4 level? Do you think that the dollar has upside? Or, in my opinion, we are just kind of stuck in a range. I just don't see, until we get more clarification, maybe next CPI or NFP, the dollar to me just seems stuck in a range. But I'm curious what your thoughts are.
So where are we in the world? We are, end of June, give or take. When are you supposed to have volatility? Are you supposed to have a lot of volatility in end of June, past the last FOMC meeting of the first half of the year?
Yep.
No. So my answer is range. And if it does break higher, I would argue, okay, it's just going to fail, because that's what it generally does. What I see slight bullishness on the dollar. Even though we have priced in 2 rate cuts this year, it's not enough to bring in the bears aggressively over the summer months when volatility starts to reduce. So I think that what FOMC gave was bearishness, and then that was turned around, I guess, and that was kind of the move. So for me, it just is, what do you call it, unsustainable moves, going higher or lower for that matter, where it stops randomly and then it goes down and it goes up again, and then you're wondering, what is your setup and does it actually work? And generally, my experience is that general setups doesn't work in the summer months now, and more of short-term, also what do you call scalping, or more like a day trade, kind of like taking less of your normal trades,
Mhm.
because if you say that, okay, if I was going to trade the dollar now, there's no reversal before it went higher, it just went higher and it just went lower, and then it just stopped at a random price of 105.90. So name of the game.
Yeah. Yep. And I think, with the dollar bouncing higher, at the same time, the stock market started to pull back. Seems like this lower dollar is helping out the story for stocks. I was talking about this just before you joined, Ivan, about the idea for the indices, really watching how Nvidia closes today. But I'm curious your thoughts on the indices as well. Again, Nvidia down another couple percent here, 2.62% today. And I'm just curious what Apple's doing as well. Apple's bouncing a little bit here. What do you think about the indices? Are they due for a pullback? Do you think that they have room to keep going? What do you think?
I think I saw a news article where it says that Nvidia lost, was it $20 billion in value in, like, I don't know, a day or so.
Yeah, I saw something crazy like that too.
Yeah, because it was 200 billion krona, which is like a lot of money. But it's just normal market fluctuation. So when it comes to S&P, the question is, where's your English? Where do you have your competitive advantage? Is it currently at 54.91 at an almost peak, at all-time high? Is that where you normally gain money? Is that your momentum trade? Sure. My kind of competitive advantage is much lower price. The surprisingly, so I'm on the wrong chart. The surprising strong June, I would argue. So if you bought every month at the beginning, that has been kind of the last 3 months been a winner chicken dinner, but it's been incredibly strong.
Yeah.
I'm surprised. I have to say that I'm surprised by that. But regardless, can't do anything about it.
Yeah, it has been incredibly strong. And again, I keep coming back to this topic about the thin leadership of a couple stocks really carrying the weight. But there is a case that I would say where I really like the stock market long, specifically like the S&P 500 or the Dow Jones, which I think, the NASDAQ has had just so much strength because it's so comprised of like tech stocks. But there's a lot of companies this year, a lot of parts of the stock market that have not done nearly as well that I think could actually be great buys and perhaps eventually benefit from the AI hype. Right now, it's just a very interesting market this year. The stock market, most things are up, but most things are up mildly. And then the indices and specifically a couple key stocks are up massively, right? You've got Nvidia and you've got Apple's and Qualcomm. So I think it's interesting because if we actually get a pullback, I think I do want to have tech exposure for sure. But I also want to look at the areas of the market that have not yet seen so much benefit. I would say, Ivan, that the other parts of the market not participating as much, like for example, the Russell, which has not done very well, or the Dow Jones, which has been flat for a number of months overall. I think what you could argue here is that this part of the market is saying we don't know when rate cuts are coming, and we need to be cautious because if rate cuts don't come soon, there is increasing probability over time that inflation could lead us into a recession. So the longer we don't get rate cuts, so the market is saying there's a chance we have a recession. That I think for other stocks that are not Nvidia, it doesn't mean that we are going into one. It's just that these stocks are saying, well, hey, small cap companies are saying, well, inflation is really still biting, and we don't know when rate cuts are coming. So when you get confirmation, when rate cuts are really truly, on the way, these things could go up. But what if a recession comes before the rate cuts? That's the downside. So just thought that was an interesting thing to consider as to why so few companies are doing well and most companies are just doing okay this year.
But is that because? So what's the general story generally? Is is it normally the entire group of stocks that normally goes higher? Like, is it entire
Yes.
base? or is it
Usually.
always like top 7 or whatever, like Meta, Google,
Well,
Tesla,
actually, that's a
Amazon?
great question for a lot of reasons. If you remember, Ivan, when we talked about like late 2023 on my screen, I'll show you this really quick. We saw yields dropping aggressively. Hold on, let me switch my screen over. Yep, there we go. On the 10-year yield, we saw during this time, the dollar was very weak. Stocks across the board, there was a lot of participation with many different companies like utilities and industrials and consumer discretionary stocks. Many things were performing very well during this time, and technology was doing well. The usual is that in a really good, healthy bull market, a lot of times you do see wide breadth or participation from many different companies because the economy is helping all stocks do really well, and so on and so forth. During this time, that was the case. Towards the end of 2024, we saw a very wide participation. Then we went into, we saw rates coming back up in 2024 for some time. And so, with rates going back up, the idea was, well, rate cuts might be pushed out for a while. And a lot of other stocks that were doing really well during this time started to cool off and really not do anything, because the idea why they rallied was because rate cuts are on the way. The economy is going to be fine. We're going to get this inflation thing out of the way. And then inflation problems came back, and that hurts companies like real estate companies. And it hurts companies like companies that sell to the consumer. A quick example would be like Nike. This is like the easiest one I can think of. Nike is really hurt by high levels of inflation because, again, if people don't have any extra money, they're not going to go buy a brand new pair of shoes. But if people do have extra money, they'll go buy pairs of shoes. Same thing with credit card companies. Credit companies seeing more delinquencies on high inflation. That's not great. So yeah, there's the stock market. You can look at the S&P 500, but this doesn't always tell the full story to what the average company beyond the top 500 is feeling. Even in the top 500, this is not necessarily completely indicative of how it's performing. Anyways, we can go down that avenue for a lot longer if we wanted to, but we'll stop there in terms of that side of things. For those of you guys who are hanging out with us live, I just wanted to make a quick plug for Ivan here. Ivan is within our Discord community. He does a lot of our coaching webinars. He does he does also offer one-on-one coaching. And I just wanted to mention that if you're somebody considering or looking for one-on-one coaching, if you're looking to improve as a trader and you'd like that one-on-one help, you can find Ivan on his YouTube channel. We'll drop the link right there. It is in the chat right now. Make sure, go subscribe to Ivan FXW on YouTube. Hit him up for one-on-one coaching. It is something that he offers at really low prices, great price for what he's offering. He's got plenty of years of experience, and highly recommended. Ivan, thank you very much for coming on the show and sharing some ideas with us today.
Thank you for having me.
All right, we'll see you next time. All right, guys. So we're going to keep taking a look at several charts here. And then in just a few moments, we are going to be having our next guest come on the show. We'll be hearing from Forex James, a new and awesome regular contributor now to the A1 Trading kind of live streams here, which is awesome. Gold up 0.35, silver up 0.22. Oil is slightly higher today. Keep an eye on this one if you're watching stocks. I think it is going to be really interesting because if you're watching stocks, oil, if it keeps pushing higher, could actually present an inflation issue again. So definitely keep an eye on oil. If you're somebody who trades the NAS, or you trade US 30, or you trade SPX, oil is important to watch here. We've seen a nice push on oil, and it hasn't really disrupted anything with the stock market. But let me tell you that if you get oil going up, creeping its way back up to like 88, right? If you see another run on oil, people in the stock market world will start to get worried. Why? Rising oil prices impacts the inflation story. In fact, arguably, it's a bigger problem than people getting lots of jobs. It's actually a way bigger problem. If oil prices rise dramatically, that is what you would call supply side inflation. Because when oil prices go up, every other price has to go up too. Because think about it. When you buy a box of cereal, and I know you guys love your cereal. What's your favorite cereal, by the way? Comment your favorite cereal. You go buy that box of cereal. At the end of the day, how did that box magically appear on your shelf for you to go buy at the store? We live in such a first world, world that we, so many of us don't even know how that happens. I certainly don't claim to know the whole supply chain process, and I'm sure that there are supply chain specialists in the audience. But long story short, it got to you through a whole process, many businesses transporting and buying and selling and commodities, and it made its way to that shelf. But to get to that shelf, it costs money, and it also costs energy, right? It costs ships and planes and trucks to move in order to get those physical products to your store. So by the time it makes its way to you, a lot of fuel costs have been built in. So even when you look at the core CPI, which takes out energy prices, you cannot, over the longer period of time, you can't take out inflation caused by caused by energy prices. Energy prices, if they continue to rise, could be problematic for the inflation story. So that is something that we always have to keep an eye on. That is why oil matters to everyone. Literally every market is impacted to some degree, varying levels of impact, but still some level of degree from the oil trade. You might say, well, I trade Bitcoin, so it doesn't matter. It does, because if oil prices skyrocket, people get nervous and we go into a risk-off environment. And guess what? Risk-off environment means Bitcoin goes down. So they're all connected. I don't care what market you trade. Fundamentals are the language, the story of the markets. That's why they matter so much. So speaking of fundamentals, if you're somebody who is a regular stream viewer and you haven't already picked up a copy of the EDGEFINDER, we'll do something really cool here. We're going to drop the link here to our 30-day trial period. If you're looking to try out our software, we'll send you information on how you can use our tools. If you're a regular stream viewer, this allows you to look at like the commitment of traders data, inflation statistics, economic reads. We just added a new services and manufacturing PMI dashboard. So we got a lot of cool stuff coming. If you haven't already picked up a copy of the EDGEFINDER, try it out for 30 days here by clicking this link and applying. Takes 2 seconds. Apple Jacks. Ooh, Apple Jacks go hard. That is a great cereal. I haven't had Apple Jacks in a long time. I think my favorite Cinnamon Toast Crunch. Oh, man. Sugary cereals. I think I haven't had, here's a little something really quick is I think Fruity Pebbles. I think they changed. I haven't had Fruity Pebbles, but I've heard people saying that they changed the recipe or that the taste of Fruity Pebbles is no longer as good. Probably what that means is that there's just not 6 pounds of sugar in every bite. But Fruity Pebbles, I think, are my all-time favorite cereal. So good. So bad for you, but so good. Anyways, guys, we're going to take a quick break. And then just a moment, we'll be joined by today's guest host. We're going to be hearing from FX James, Forex James from Elite Traders. Stay tuned. Coming in just after this. If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the EDGEFINDER. The EDGEFINDER allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The EDGEFINDER also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The EDGEFINDER also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the EDGEFINDER today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream. All right, guys, and we are back with the one and only Forex James. How's it going, James? Welcome back to the show.
Hey, Nick, I'm good, thank you. How are you?
I'm good. Glad to have you back on. And again, James has been taking over. For those of you guys who are tuning in here for this next segment, stick around. This should be a good one. We've got James going to be taking a look at some charts, going through his setups, things he's watching for. And before you take over this the show for a little bit, James, I just wanted to mention to everybody listening, if you enjoy this segment and you'd like to hear more from James and his company, Elite Traders, we're going to be dropping the link directly to his website where you can find out more information about the services that they offer. He puts out great content. Again, their site has plenty of good stuff there as well. So take a moment to review that. And again, if you like what James has to offer, make sure to go throw him a subscribe and find him on socials. So James, I'm going to leave you the show for a little bit. You got it, my friend. And we'll see you back in a little bit.
Great. Thank you, Nick.
All right.
So, guys, how is everyone doing today? You all had a good weekend? Sorry, I might sound a little stuffy today. I've got hay fever. Yeah, struggling a little bit with the plants, but that's okay. We move forwards. So there is something I'd like to show you guys. You can feel free to print screen this if you would like. This is Credit Agricole's bank report from, this one was Friday. The information is still relevant, so feel free to take this away if you want to. You should be able to read this, but this is a rundown for all of the major currencies really and gold here. So you can see the NOK. I've been speaking about the NOK quite a lot, actually, saying that it's very undervalued. And sort of going into 2025, we could definitely see a stronger NOK. So that's nice. So yeah, feel free to screenshot this if you would like. I'll leave it on the screen for a second. Pollen in England is evil. Yes, it's very, very difficult to live with. I took some Pirites, if anyone knows what that is. It's a sort of hay fever tablet, but they don't really seem to do much. So yeah. Moving forwards, Credit Agricole is still selling the yen. Well, I guess buying the yen, selling the dollar yen and euro yen, long on the euro pound as well. Interesting thing is they are all in a loss at the moment. You can see negative 61, plus 4.9%, or sorry, 0.4.9%, and then negative 7.6% as well on the euro yen. So they're not doing too hot, which is quite interesting. Let me pull up the euro yen chart for you to see. So if we mark up their position, it'll make more sense on a weekly chart here. So we can see prices are actually broken above the previous highs. This was a major level of resistance. I've been watching this for quite a while, but there's not really been any reaction here. And to be honest, there wouldn't be, because nothing's really changed on an economic point of view. So give me 1 second. I'll mark this up so you can see the actual position. So 160 entry, that was a target. So entry is 168. Yeah, so they entered here. Their stop loss is 2.7%. So it would be, actually, they're almost at their stop loss now. So this is the Credit Agricole position on euro yen. And to be honest, from a more retail point of view, this looks awful. But there you go. You can't really come in from a retail perspective and say that an institutional position looks bad, because obviously they have more insights, they have access to more things than we do, generally speaking. Black seed oil tastes vile, but it's great for hay fever. Black seed oil, that's interesting. Okay, I'll take a look at black seed oil, thank you. Shorting the JPY is a bad idea. Well, actually, shorting the JPY is a good idea. Going long JPY is the bad idea. So going short euro yen and dollar yen is it's a bit of a difficult one. We did see some movement today. So again, this is something I've been saying that I'll get rid of that position for now. I wouldn't be going in for any long positions at the minute, because we have things like these wicks. Now, I'm not sure if this was an intervention. And if it was very, very minor. But, there's no warning for moves like this. It's not like we can read a bank report, or we can look on FX Street or EDGEFINDER or anything and say, watch out for this level at this time because there's going to be an intervention. We don't have that. So, for example, if you entered off this bullish engulfer and let's say you had your stops at break even, you would have been taken out for no real reason. So yeah, for me, it's just a bit too choppy. We're in danger zone, really. You know, if we take a look at the dollar yen, it looks a bit dangerous to start taking trades here. Now, I'm not saying it's bearish by any means. I'm definitely not a bear on this. I am bullish, but it's just, you know, from a technical point of view, there is no entry for me. It was talk about intervention, like always. Yeah, intervention it's kind of like the main driver, or like the main concern, really. I mean, it's interventions aren't made. So the MOF, which is the Ministry of Finance, they don't intervene in the yen to reverse it. The reason isn't because they're sat thinking, oh no, the yen's losing too much value, let's cause a reversal. It's more just to stabilize and slow down against the dollar. So, you know, even if they do intervene, it's not a case of we'll start seeing the yen move heavily to the upside. It's just that quick fluctuation and a slowdown. Anyway, moving on. New Zealand Swiss is one I took on stream last week. I think it was Thursday or Friday. In a bit of drawdown here at the moment, but it's not really doing much. I am not totally convinced about this position, and I'll show you why in just a second. But I can show you the EDGEFINDER for this. So EDGEFINDER is very bearish on the New Zealand Swiss. So we can see COT data is quite flat, retail sentiment, seasonality, trend reading, inflation, interest rates, PMI, manufacturing PMI, employment change, and unemployment rate all in our favor. So it does look quite good on the surface. However, we are currently long on the AUD CHF. So I can show you this position here. We've been long since, I think it was early last week, actually. So yeah, the 19th. And this one's moving quite smoothly. So the New Zealand Swiss trade was yes, because EDGEFINDER looked good. And yes, because technically this lines up well with my criteria. But this also acts as a nice hedge for our original AUD CHF position. So yeah, it's quite a nice place. So if this does hit stops, for me, it's completely fine, because that means our other position will be doing, you know, more than fine to cover that loss. Now, hedging is not something I do on a day-to-day basis. You know, I don't really go into the markets looking for hedging, but you know, if it presents itself, I'll happily take a small risk just to cover, you know, upside and downside of other positions. So technically, you know, we've got this golden zone right here. Price is inside at the 50% level, which is what I like to see. So if we take the high, which was here, so we take the previous high to the low, this is a move of 144 pips. So the 50% retracement should be here. Yep. So around 70 pips, which we can see here at 69.7. So it's a 50% move backwards, or 50% correction of the previous move is kind of what I aim for in a technical setup. And then that's where I'll enter for continuation. So we can see very, very nice move to the downside, lower highs. We did create sort of a double top here, or slightly higher high, but still the trend is unbroken. So I'm now looking for this to be the new lower high and a continuation to the downside. Price is still underneath the 200 moving average. So yeah, technically it looks fine. It's just playing around at the moment. You know, we've not really seen much movement since we entered. So that's that. There's not really much to cover there. We do have US 30. And I was talking about this actually again on my last stream here. Someone asked about this, and I was saying that technically there's not much there for me other than this this fib that lines up with this kind of support level, but it wasn't strong enough. This wasn't a clear enough level for me to be interested. And typically since then, we've seen this really nice move to the upside. It's played out really well. But yeah, it's just one of those moments where you analyze something, it doesn't look great, so you don't take it, and then it works out exactly as you would like it to, and you didn't take it, so you sat on the sidelines. Till where pullback can last in pound Swiss, we can take a look at pound Swiss. So where the pullback can last is a bit of a difficult thing to answer, because I can't give you an exact price level. But what I can do is just use my trusty fib. So if we draw from the high to the low, because we're looking for a sell, obviously price is moving cleanly to the downside. So this would hopefully be the nice pullback. So again, fib we've got drawn. If we draw our box from the 61.8 to the 0.5 level, this creates our golden zone. This looks like a really nice level of previous support. We can see prices respected this level quite nicely. Actually, really, really strong level here. Bearing in mind, this is the 4-hour time frame. So if you were looking to short on a technical basis, it would be something along these lines here would be my move. However, the Swiss seems to be doing not so hot at the moment. You can see all the Swiss pairs are actually moving to the upside. So just keep an eye out. Don't be entering this just because I've drawn a box on my chart. So, you know, do your own due diligence. But yeah, it looks technically okay. Actually, what we can do quickly is just have another look and see if there's anything interesting said about the Swiss here. Another rate cut and dovish forward guidance from the S&B in June has seemingly halted the recent Swiss rally. Until more central banks join the easing party, the Swiss could remain on the back foot, although nominal losses may be limited by persistent political risks in Europe. And global uncertainties in the near term will lower inflation differentials will depress the CHF real valuations in the long run. So again, guys, feel free to screenshot this. It's just you know, small breakdowns on different currencies. Glad I'm not the only one who has that happen. Cut US 30, but gold went without me. Yeah, gold's a tricky one. Again, I've been talking about gold quite a lot. I think gold's a really hot topic at the moment, but it's just not quite there for me. I think Nick is in another gold position from what I saw. But yeah, it's just, again, it's just stuck in this sort of middle ground right here. And I don't like to trade this. I like to see price at a very specific level, whether it's support, resistance, and then hopefully that would then align with a Fibonacci pullback. So yeah, if we draw the fib, again, we can see this level of support is inside this golden zone really, really nicely. So I would only really consider going long if we could then pull back again into this level of support and then have a take profit somewhere, probably not back to all-time highs, probably just to around here to play it safe. You know, I'm not looking to try and take this all the way back into new levels. Well, I say back, but yeah, into new levels. It's not really an interest of mine. Stop loss below previous lows and slightly below the 618 level. So it'd be quite a simple trade, really, just going for a 1 to 3. But that's, you know, that's if we can get this pullback, which I'm not sure we can. So for now, I'm just sat waiting. Nothing too interesting for me there. So yeah. Is there anything else you guys want me to cover specifically? In the meantime, I can show you something that might make you guys feel a bit better about any losses you may have had. So crypto isn't something I touch really. I'm not I'm not in any cryptos. I'm not invested in any cryptos. There was something that made me giggle on Twitter, which was a Bowden crypto, where you do have the elections coming up in the debates this week. So I've been buying this token. I think I've got 7 buy-ins here, and they're all in a huge loss. So that's that. You know, I don't, obviously not telling you guys to go and buy this or anything. Definitely not. It's just quite funny because it's a small amount of money. You know, if it just goes to 0, it's fine. It's more just see what happens. Euro dollar. We can take a look at euro dollar. So I'm quite bearish on euro dollar at the moment. Actually, a really nice setup here. We've got interesting. I quite like this to the short side. If anyone's watched the video on my website, you'll know that this is kind of a perfect setup, really. If we could get a bearish 1-hour closure here, I would be looking to go short here. Yeah, potentially back to these previous lows. I don't know if this is a fib level, so let me just check. If it's not a fib level, it's fine. It's not. So that's fine. Don't worry about that. So the reason I'm going short is because I have two strategies that are mixed together. And that's, what gives me such a strong entry criteria. But I can strip the fib away and go back to sort of the basics of it, which is a pullback in a downtrend. So we can see prices moving very nicely to the downtrend. We've had a pullback to the 200 moving average, and it looks like we're about to have a bearish engulfer close. We've had the RSI come to an overbought level. We are at a level of structure here as well that might not hold. So overall, technically, it looks really nice to me. Stop loss above the highs, take profits at the lows. Very, very simple stuff. But yeah, I'm just not overly certain on the euro at the moment, and the dollar seems to be quite weak. If we take a look at the dollar index here, we can see we've had basically bearish moves all morning. So let's just see what this is. When I say all morning, I mean the morning for me. I'm in the UK, so time zones may differ. But yeah, almost a 0.45% move to the downside on the dollar over the past, when was this? Actually, yeah, all morning. This was 1 a.m. So yeah, not too great really. So yeah, sorry, back to the point. So yeah, euro dollar to me would be quite happy to go in for a short position. On a short-term basis. Over the long term, I'm not too convinced on either side, because we do have elections coming up and things. I'm not really looking to take any long-term positions here. James, yeah, no problem. This is actually very basic analysis. I've kind of been away from the charts quite recently. When I say away from the charts, not literally. What I mean is not quite paying attention to the economics as detailed as I normally would. So I do need to get back into that habit. I've just sort of been preoccupied with other business things. So I've been trying to get FCA authorized. And if you guys don't know what the FCA is, it's essentially the SEC in the UK. So it's the Financial Conduct Authority. I've been really, really trying to get authorized so I could then become a dealer and an investment manager. But man, there's so many hoops to jump through. So you've got to have a FCA authorized compliance manager. You've got to have 100K capital. You've got to then pay 30K up front. You've got to have qualifications. There's a lot of things to do. So I'm working on that, but it's going to be a very, very long and difficult process. So US oil, sorry, I got this habit, guys. Please feel free to tell me to shut up if I start rambling on about things you don't care about. So oil, really nice moves to the upside. We did see quite a strong move to the downside here. I know that we in Elite Traders were actually trying to go short. I think we shorted here. So after we had this bearish candle, we were looking to go short, and we just sat in drawdown for, I think it was like 3 days. And we just got stopped out. So it was one of those trades where you sit and it's just painful because it won't stop you out, but you know you're going to get stopped out. But then your risk management is, you don't close trade early, or that's what mine is. So it's a very painful and long process. And then we just got stopped out very, very quickly on this candle. But yeah, anyway, to the point, let me just scale down time frames. The daily is really nice, so I would be looking to go in long. So actually, you know what? I quite like this. Nice level of resistance throughout here. Broken down. We've broken back above. So this is a very nice break and retest pattern. I don't really like these candles. We do see a lot of wicks to the upside and downside, which to me tells me there's some indecision in the market right now. I do quite like this though, so I might just wait for the daily close. And if we can get a nice strong daily bullish candle off here, I would be more than happy to look for a long position, possibly just to this sort of wick, see if we can get a fill here. Yeah, so nothing too crazy on this. It would just be sort of a 1 to 2.5 ish, sort of around that area. US 30, Euro AUD for sure. We can go through those. Actually, again, we were in Euro AUD position. We got stopped out this morning, which was quite unfortunate. So you can see here, So we've really been working the Euro AUD. So the basis here was a weaker euro due to the political problems that we're facing in Europe. We also have the hawkish RBA. So this was a no-brainer trade. This was weak against strong. So it was very, very simple. So we got two successful trades for around 3.5%. This was 2.5, and this was just a simple 1. And then we got stopped out here for negative 1%. We can see now we're starting to see a bit of a reversal, which is typical, but that's the way, that's the way trading goes. So overall, I'm still bearish on this. I don't, nothing in my mind has changed. So I would actually be looking to re-enter pretty soon. So I think we've actually missed the move. So ideally, I would have gone short after this second bearish candle. So I would have been in short around here if, obviously this is a perfect world using hindsight. However, if we can get a nice H4 close, we could just scale the time frame up and go for a longer term position with a slightly wider stop and then target our original take profit. So it'd be something along these lines. Again, I don't know about the fib level here. Oh, wow. Actually, it's really nice. This is a 50% pullback here, slightly over into the sort of golden zone. But yeah, this looks really nice. So maybe I might re-enter that one actually after this candle close. We've got 2.5 hours, so this may be a position I'll take. GBP USD. Yep, of course. Oops. Wow, nice strong move to the upside. So pound dollar is tricky for me because we've got elections in both places. We've got UK elections and US elections. So it's not something that I'm too concerned about trying to get into because it's not a trade I'd want to hold on to anyway. Broken fib. So if we can get a bearish hourly close here, like we just saw on the Euro Australian. Let me just draw this up for you. So if we could get a nice strong bearish engulfer off here, that would be a great sign for me to go short on a technical aspect. However, we do have the dollar here, which again actually is showing a really nice setup. So for me, this will, if I don't trade the dollar directly on its own, but this would be a really, really nice technical entry here. Nice bullish candle off a 200 moving average, RSI is oversold. So yeah, if we can start getting some dollar strength, we also see the same entry possibly occurring on pound dollar. This would be quite a nice technical setup to do something like this. Now, again, because I'm not too convinced either side of this is just based on technicals, it would be a case of lower risk, so maybe half, so 0.5% or 1%. So I normally risk around 2% per trade. So 1% to me is half, and then 0.5 is around a quarter. Let me just redraw my box. I like my boxes. So yeah, I quite like this. So I'll keep an eye on that one. But yeah, to me, this would be to the downside. Let me just catch up on your messages, guys. 1 second, please. Surely gold is worth looking at right now. It's at a major point. Yeah, we can have another quick look at gold. To me, there is no major points in gold other than the two supports and resistances. I'm not sure what major point you're referring to be honest, unless you mean just this level of sort of resistance through here. But for me, this isn't enough. Gold would be more of a long-term play, and this is too short-term in my eyes. I would need to see something happen on the daily time frame. So if you were looking to take a short-term position on here, I would be looking just for the break and retest, nothing too complex, and a long position off here, back to these highs. Oops, back to these highs and a stop loss somewhere around here, just to make it a sort of 1 to 2, 1 to 3 type trade. I wouldn't be looking to short gold. I would only be looking for this, and I'm not looking for that. Let me make that very clear that I am not going to be taking this trade. But if I was, this would be all I would really want to see. Anything else wouldn't fit my criteria. I don't trade FVGs. I don't think they're a real thing, to be honest. So yeah, I think that's it. Let me just do a quick check of my watch list. Let me see if there's anything on here. Wheat, I did speak about wheat, but for anyone that wasn't here, I would have loved to have shorted wheat. I've been looking to go short since sort of the start of May, really. And then on a seasonality software that I use sometimes, there was basically a breaker here. So from this point of the 7th of June, there was a 100% chance of bearish moves, or based on historical performance, of course, through to, I think it was July the 7th. So I was looking to execute a short here, but this move happened prematurely, or earlier than I thought it would. So I missed the majority of the move before, it was actually my time to get in. So now I'm a bit sore about that. I got a bit of FOMO seeing this really nice run to the downside. So I'm now just looking for this pullback. You can see I've already drawn up here. So I'm just looking for this move to the downside and a pullback to one of these levels of resistance for a continuation to the downside. What's gold doing? Not much, to be honest. I mean, unless you're seeing something I'm not. Hold on. Yeah, I don't think there's anything going on with gold. It's just moving to the upside. So of course we've seen a weaker dollar, and as Nick was saying, it doesn't, just because we see a weaker dollar doesn't mean we'll always see gold moving up. So don't take that away from what I'm trying to say, but we have seen a weaker dollar, so we do see also in hand see that help out gold. And gold is bullish anyway. We've got a lot of driving factors. USD CHF. Yep. Give me 1 second. Let me pull this up for you. So I am not in this, but I was looking for a potential move to the downside on here, which hasn't happened. So let me just get rid of these drawings. So what I would really like to see is a pullback sort of to this level of previous support. And this would then in turn lead to a really nice break and retest. As I keep saying, that's just the way I trade. I like break and retests as long as they line up with a nice fib level. And in this case, it lines up to 61.8. So this would be really, really nice. And then if we pull up the EDGEFINDER data on here, we can see it's quite bearish. We've got a negative 11% score. So this is actually even stronger to the downside than New Zealand Swiss. So we can see the COT data is flat, but basically everything else is in favor to short, apart from services PMI and employment change. Retail is 60% long. Seasonality is bearish. Everything, well, not everything. Basically everything looks really good to go short here. But it's just too early, I think. I don't think we've seen enough upside for us to, or for me to warrant a downside move for me. I would like to see, like I said, this level get hit. Let me get my brush. So a pullback up to this sort of golden zone, and then the move down to sort of this fib extension, which would be really nice, which was kind of line up with this level of support down here. So quite simple. Pound yen. So there's not much with the yen pairs. I've been saying that I'm very, very bullish on them. I think they still have a lot of upside potential, but they're just too expensive. So if we look here, no one, well, sorry, I'm saying no one. Probably the wrong way to say that, but why would you want to start buying pound or pound yen or any of the yen pairs when it's all the way up here? You've kind of missed this move. So I would like to see a healthy pullback, which I don't think will happen unless we get an intervention. So for example, This move here was really nice. I think this was 2 interventions straight after each other. As far as I'm aware, I can't really remember actually off the top of my head, but we need something to pull price back to allow some more long positions to get in, because at the minute there is nothing here. You know, there's what can you trade from here? You'd have to go in blind essentially. You know, we could ride back up to sort of up here. This would be a nice target to have over the long term. Bear in mind, this is the weekly time frame. However, if you are just entering on sort of the 4 hours, it's a bit too messy for me. Like, there's just no clear place for a stop loss. There's nowhere for an entry right now. Would like to see pullback, even just down to the support here would be great. And then, you know, if we continue this ride to the upside. Silver. Yeah, we can do silver. We are in silver actually, which unfortunately I can't show you that position yet. But yeah, we are long silver. I think silver actually is probably my most favorite setup so far. So again, you know, the fib, you know how I roll by now. We've got the golden zone here that lines up really, really nicely with the previous high. So this is, again, when I talk about break and retest, this is perfect. We've broken out from this daily resistance and now we're retesting and potentially coming up for a further move. So that's kind of as simple as it goes with silver. Really nice trend line here. So it's kind of, it's one of those trades where it's so obvious, I'm a little concerned about it. I mean, I'm not saying there is any reason to be concerned about silver. I'm not saying, you know, it's going to fall off a cliff. It's just one of those things where the setup looks so nice. It's almost too good to be true. So hopefully we can see silver prices continue, but, you know, don't want to jinx it. I'm very interested in New Zealand. I'm looking to buy it against the Swiss. Interesting you should say that. Here's my position. I actually took this last week on this stream. So I'm in drawdown. So if you want to counter trade me, please feel free to, because I'm not super confident about this one at the moment. My rules are to set and forget, essentially. I'll place a trade, I'll let it hit stop loss or take profit, unless there is a super, you know, some real reason to get out of the trade, like an economic change or a catalyst. But overall, generally speaking, I just leave trades alone once I'm in them. I think messing with trades too much really, really affects your overall P&L, your psychology, and I just don't really believe it's a good thing to do, to be honest. Speaking to the masses, I'm sure individually it works fine. How do you set your take profits, fixed or structure? My take profits vary. So this is actually a good example. So my take profit is kind of in 3 places. So I always set a hard take profit at the furthest point possible, which to me is down here. So if we look, really nice level of support, and this is, if we reach down here, I'd be happy to take my profits off the table and walk away. However, I also have a level here, which is the first fib level. This is the previous lows. That's where I'll reevaluate. I'll say, okay, is the trade still valid? What does EDGEFINDER say? What are the candles doing? How is it reacting around this level? And then I will either take a little bit of profits off, move stop loss to break even, or just let it run. It depends. Normally, I'll just move stops to break even, and that's it. Then I'll have another take profit here, which is where you can see take profit 2. This is the Fibonacci extension at -618. And this is normally where I'll set a hard take profit if there's nothing else to really structure on. However, we do see this wick, and then slightly below the wick, we also have this level of support. So in this case, I'm happy to ride it all the way down, or try to at least. But generally speaking, I'll have a very small take profit at the first level or at the second, and that's about it. So yeah, my stops and take profits are quite discretionary. The only thing that has a very, very set rule is the entry criteria, because in my opinion, that's the most important thing. Because I am quite lenient with capital in terms of I I'm happy to lose to make money. I'm happy to take that risk. I'm happy to slightly move my stop loss up into maybe slightly more risk than I typically would to allow price that extra fluctuation if I feel like it needs it. But I obviously wouldn't ever suggest that a regular trader would do that, because it can really mess up things if you don't manage it properly. Agreed. We'll wait a little. I'm expecting choppiness till PCE data, so I'll look to catch shorter term sells on the pound, euro, or CAD, potentially go opposite in those indices, but all depends on CAD CPI. Yes. Don't forget, guys, it's only Monday. There's no reason to rush into trades. We can chill, we can watch the markets, and we can, if you get FOMO, then you get FOMO. That's, it's a payoff for being patient and profitable. Leading currency at the moment is the New Zealand dollar. Then we've got the Australian dollar in, actually very, very close second. Worst performing is the yen, as always, basically. Dollar's really underperforming. We've got the CAD that's sort of in the middle ground with euro and pound. In fact, the Swiss as well, pound, euro, and CAD are all kind of clumped together, not doing too much. Magnificent 7 is moving nuts today. Magnificent 7, that's the stocks, isn't it? That's like the FANG stocks. I'm not a stocks guy, so I can't really, I'm not 100% certain what the Magnificent, hold on, let me just Google it. Wow, I feel like I'm just learning to trade again. Yeah, it is. It's the, yeah, okay, so it's FANG, top tech stocks, Magnificent 7. NAS 100. Yes, let's take a look. So, actually, the only thing I do sort of know about stocks is NVIDIA. And I know last time I checked NVIDIA, we were seeing some downwards movements. So, yeah, there we go. I've also seen, and this is on Twitter, so this could be false information, so don't take my word for it. But from Twitter sources, I've seen that the higher up people in NVIDIA are starting to sell shares at quite a significant rate. And we are also seeing some downwards movement now on the NVIDIA chart. So I don't know. I'm not saying that, we're going to see a complete reversal on NVIDIA, because I don't think that's likely. If we look at this chart, it's almost like a meme coin at this point. However, I would actually quite like to get into NVIDIA if we could see quite a healthy pullback. Something along these lines back to this level. Now, again, I'm not a stocks trader, so please take this with a grain of salt. Stocks are not my forte. I'm more of a FX and commodities guy. So I think we could come down. We could even fill this gap somewhere like this, and then we could continue to the upside potentially, as long as nothing has changed, as long as the earnings and all that sort of stuff is still positive. We're still, overall foundations of the company are still fine. I think we could continue up, but I think it's a case of it's just too expensive. I think it's also I saw a headline that NVIDIA employees are actually retiring because their shares are worth so much now. The higher up people, their retirement funds or whatever it is, their shares in NVIDIA are worth 10 to 20 million. So they're just retiring. They're just leaving the company, which I find is quite interesting. So yeah, again, depending on NVIDIA, NASDAQ could, or well, probably will see quite a nice pullback to something like here. And I think this would be a great place to get into, to get in for a long play. So this would be my plan of action. So I wouldn't really trade NVIDIA, to be honest. I would more use NVIDIA as a point of reference, because it's basically, it's basically what the NASDAQ is now. It's basically taken over. It is what runs the NASDAQ. It's like Walter White. Olympics in France could give us inflation rebound Eurozone. Yeah, we could. Yeah, the Olympics is actually something that's quite overlooked in Europe. Or sorry, when we talk about currencies. But the Olympics are a little while away. I think they're in a month or two, aren't they? So I'll have a proper dig into that in a week or two. I live in Ireland. I have a big problem for knowing what session I should focus on. To be honest, sessions are a very individual thing. It depends on you. If you work full time and you're based in Ireland, then London session's best for you because you could trade that potentially before you start work. Obviously, it depends what time you start working. If you do work, if you don't work, you trade full time, then New York would be the session for you. However, if you're a more long-term trader, you don't need to worry about sessions. I don't care about sessions. I trade more long-term intraday type of thing. It's not uncommon for me to just sleep through London session and go out for lunch when New York session's open. I really don't care because, to be honest, if I see a 10 pip move on whatever assets it is I'm trading, it's not going to affect my trade. Who cares? It's a case of if you are scalping, if you're trading stocks and shares, obviously you need to be there for the New York Stock Exchange Open, New York Open. But for me, it's not the case. I enjoyed your insights, Jeff, of socials. Thank you very much. I appreciate that. Yeah, I've got YouTube. I've got Twitter. It's just my name. It's just Forex James. You can search them both. I appreciate the feedback. But yeah, guys, I honestly don't have anything else to share with you unless you have any last minute requests. But yeah, if not, it's really warm in the UK, so I might go and have a barbecue or go and have some beers and get off the charts for a while. So yeah, nothing really going on. Let me just quickly check euro dollar one last time because this might be the only trade for today for me if we can get this 4-hour close. So yeah, guys, feel free to pay attention to this euro dollar one. It might be one that I call in Discord. USD CHF. Yes. 1 second. You should only care about sessions if the time of day matters to your strategy. Yes, Diego, that's exactly what it is. If your strategy relies on sessions, then obviously you need to trade a session, and it should be very, your strategy should tell you what session that would be. But if you're trading on sort of the 4-hour and the daily time frame, like I said, if price moves 10 pips on New York Open or 20 pips, does that affect your trade at all? Not for me, it doesn't. Yeah, so here's my very artistic drawings. So yeah, one last time, dollar Swiss, just waiting for a pullback into this level of previous resistance, and hopefully if we do get this pullback, it would react to this 61.8, and then we would see a really nice where's the brush tool? Here we go. See a really nice bearish candle off here, which would then potentially lead to downside movement. But yeah, overall looking for this break. We've had the break and now looking for this retest and push down. So quite simple. But yeah, guys, actually, I'm not sure if there's another guest on after me. Maybe I've got some more time. I don't know. USD CAD, I'll keep going. We can keep steaming out these charts. USD CAD. Oh, this is still here from my previous stream with you guys. So I was saying with USD CAD, we do have. Sorry, just give me 1 second. Let me just remember what I was saying. So we've got this level of resistance on the weekly time frame. This is obviously a very strong level. Now, I wouldn't like to buy into this, but we could buy to this level. So essentially, I would be looking to buy into this this first level, this sort of daily resistance. Then I would be out. I would be waiting to see how price moves in this level, in this area here. So this would be the no trade range right here. Then in an ideal world, we break out, we come back for this retest again, and then we see the continuation to the upside into this next level here. And this again would be where I take profits and just sit on the sidelines. So if we're looking at actually getting into this trade, it would be very, very simple. We've got this really nice level here of resistance. Again, we've broken above, we've come back down and now using it as support. So if we could come down again, and this can act as support, then I'd be happy to get into a trade. Stop loss below these lows over here. And yeah, just let it ride and have a take profit right here at this level. And again, like I said, once we get into this level, I would sit and I would wait until we can see this retest and go for a more long-term position. So that's it. That's my view on dollar CAD. But yeah, we'll see. We'll see how it plays out. You know, anything can change by then. So let me see. New Zealand. Oh man, I missed it again. This is typical. So I actually sound like a very typical sort of trade, social media trader here. So, oh, I meant to buy here. I set a buy limit, but it never got tapped. It missed by 1 pip. I'm such a good trader. But yeah, I mean, if you don't, you know, you can go back and watch the streams I've been in. I've been talking about the Euro New Zealand for a very long time. I've been waiting for this pullback for a while now, because I missed this first one here. I've been sat waiting for a second one up to sort of 0.5 level, and you can see it essentially came up. You know, markets are never pip perfect, but this was enough for me, and now we've had this reaction off. So this would have been great. But like I said, it's Monday. There's no point chasing the charts. If we can, you know, see how this next 4-hour candle closes, it might be a euro dollar play. Sweden claims to have beaten inflation, so maybe a USD SEK play after PCE could be decent, but I don't usually trade exotics. Yeah, I don't trade exotics either, but actually the exotics are where you can make the most money, really. So I have a friend that owns a fund in London, and he essentially he trades the London Stock Exchange stocks and the exotic currencies. He has made a lot of money on Turkish lira. I know the yen's not exotic, but he's been in euro yen since 110. I think he's still in now. But yeah, the exotics are where you can make a lot of money if you can play them properly. But they're very trending, so it's quite hard to just get in them. You can't really, you know, just trade them frequently. You'd have to find some sort of trend changer and just ride that trend. SEC recovery of Q4 23, so that's Q4 of 2023, has stalled this year, in part possibly due to complication of FX sales made for reserve hedging purposes, while Sweden's macro prospects have recently brightened. The SEC could still be held back by more dovish turn undergone by the Riksbank. Yeah, no problem at all. So yeah, I mean, I would need to do a lot more research on the SEC before really giving you too much, because like I said, the exotics, it's a lot more economics driven, whereas like things like euro dollar, the majors and the minors, you can sort of just trade them short term based off technicals. But yeah, for exotics, you kind of need to be keyed in with what's actually moving the market. You can't just go in and day trade off support and resistance, really. I mean, you can. Essentially, you would just buy the exotic against the major, but you know, realistically, you would need to do a bit more research. So sorry, guys, you're reading the message. Okay. Cool. So A1 guys don't seem to have anyone else on after me. So I am going to go, guys. I've been James, are you in EU cells? Yes, not yet, actually. I am looking to go in EU cells today, but not right now. If you want to, feel free to rewind the stream. I covered it quite in depth, really. So yeah, guys, I'm going to go. I hope you all have a great day and have a good week. I might be back with you pretty soon. So yeah. Thank you all for watching. I appreciate you guys. Again, have a good week. I hope you all make some profits, and I'll see you very, very soon.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.